Hey investors, welcome to Tapestry's second quarterly earnings report that just released today. The market showed a 1% decline for this stock, and I'm here to analyze today's numbers and guidance towards this company. As you know, Tapestry, it's the luxury company of Coach, Kate Spade, and Stuart Weitzman. Today, the stock is $15.43, close to its all-time lows. And going into this quarter, analysis has an average estimated revenue of about $663 million. We're going to look into that today to see if Tapestry meets it and what kind of chapter of growth is ahead. Now, looking at it, it's obviously not surprising that this quarter is going to be an ugly one. But besides it being ugly, what other bright spots are going to come out of it? That's what I'm going to be looking at today. And first thing we look at is from the interim chief executive of Tapestry saying, looking forward, Tapestry's next chapter of growth is ours to write. While this situation remains volatile, it's not changed our long-term objectives. All right, it's actually been a catalyst to accelerate our plan, our strategy, and they are implementing this new acceleration program, transforming their brand into more data or digital driven with a better connective community towards the customers. And they believe that this program is going to create stronger connections to the customer and even accelerated growth back to its own self, say last year. And this is the program that they're going to be offering, which I'm going to talk about later on in the video. But besides that, let's take a look at the quarterly results, top and bottom line expectations. You are going to expect $663 million from an analyst say, but they have a nice beat of $714 million, about 7 to 8% higher than what analysts has been expecting. So that's sweet. That's good to know. But still, compared to year, it's down about 50% right here, and that's an ugly number to look at, but still better than what analysts are expecting. The entire quarter, they are losing about $293 million compared to year over year, where they're actually earning about $148 million. Obviously, with this coronavirus situation, buying handbags and luxury, especially handbags and luxury clothing, isn't the top priority for a lot of people. In fact, it's probably like the lowest priority. So you would expect, a big decline in business. As you can see here, Coach suffered about 53% loss in business. Kate Spade, about the similar percentage. And Stuart Weitzman, the luxury shoe brand for a woman, they suffered about 61% of business decline. That's tough, but you know what? It's exactly what analysts were expecting. And overall, the company is struggling at this time. Their objective is to make it through to the other end of the coronavirus situation and gain back old business again. Besides that, we have to talk about their cost of sale right here and the expenses that they've incurred. It feels like they are actually losing out a lot of money on Stuart Weitzman. And what I would like to see from Tapestry is that to really focus more on Coach and Kate Spade as a brand. Focus on those two, since both of them are actually profitable business. Now, you take a look at their balance sheet this quarter. They have increased a little bit more of cash. That's good to see. And they have increased their total assets. But what I'm not pleased to see is that their liabilities have gone way up, especially the current liability of $1.7 million. Obviously, the current debt of $700,000 right here. That's because of the line of credit to make sure they make it through. That's a tough number to look at right now, but you have to hope that with the next coming years, they're able to become much more profitable with their Coach and Kate Spade business, earning back a lot more business, getting more profit margin sales. That's what I hope to see. Long-term debt, about the same as last year, so that's nothing to really look at. But other than that, most of their stores internationally are opened up, and looking at it right here, actually, because of the digital business that they were focused on prior to the coronavirus situation, it has really helped them out, and that showed a triple digit rise in their digital sales. So that really eased a lot of pain, not just relying on direct to consumers where your retail in store, you can rely on your digital business as well. Now there's better growth in China. As you know, China has actually controlled the coronavirus situation very, very well. So stores have been opened up for much longer than everywhere part of the world. And they have been doing well. Businesses are coming back to normal. Now, besides that, the other part of bright spot to look at in this quarterly report is their actual acceleration growth plan. Their plan that they are seeing as a long-term big growth for the company, and it is to sharpen their focus on consumers, making sure that it's gonna boost up digital and create this very interactive connective experience of consumers. And they are gonna close down some stores. That's part of the agenda, and mostly focus on e-commerce, like what a lot of companies are focusing on right now, which is not surprising. And they will see that they will forecast actually that they are going to use about $200 million of expenses to implement this program, and in turn they are going to save about $300 million approximately in the long term. So if you calculate that, you can see about $100 million in return through this acceleration program. So that's like kind of the upbeat spot that investors are looking up on, like all of us, because if we didn't have this program, we can see the stock drop probably about 5 to 10%. So something to look forward to, and that's exactly what Tapestry should give us. Obviously, with the 50% decline in revenue, that's expected, but in the next quarter, you would want to see a bigger growth of business and no more declines than that. As you can see here, next quarter is estimated about $1.14 billion, almost a double of the current revenue this quarter. And hopefully Kate Spade has enough business and enough customers for them to make sure this thing happens. And their acceleration program is going to start in effect this year, and hopefully we see in the next few years how successful this program will be. All-time highs, I don't think it'll reach it anytime soon, probably 5 years from now or not. But you know what, getting back to the $25 range, it's very reasonable in the next few years as we start to see more, probably a recovery in the economy, and a lot of girls and women still having the love for this brand. That's how I hope to see Tapestry really reinvent their product to capture old customers and even new customers again. Right now, is this the stock for me to buy more of, sell, or hold? As you can see here, this is a stock that I recently purchased lately in around the $13 range. This is a stock which I feel will be a comeback in the next few years. Definitely not in the short term, so this is a long-term outlook. And I do think this stock will come back in a nice fashion. This will obviously go through some tough times. You are gonna probably see a few quarters of missed revenue. But other than that, I feel confident it will come back with strong business in the next few years, especially with the new acceleration program to reinvent their products. And as for me right now, I'm going to be holding the stock. Will I be more interested in buying more or selling? Definitely not selling today. I still think there's a lot more potential upside for this company. And buying, I think I am okay right now. I could purchase more shares if it goes down to my original cost basis. But right now, this is a stock to watch right now. I see good upside to it. Hope you guys have really enjoyed this quarterly report analysis. In the end, my final grading for this is going to be a C+. It's decent, with a little bit of nice expectation beat and some upbeat guidance. But other than that, it's been an ugly quarter for them in revenue loss, about 50% of the entire business. Hope to see lower loss next quarter and probably like a break even by the end of this year. Hopefully that's the best case scenario. So hopefully you can take a look at this stock, and if you're interested in buying it, go take a look at the financials, the balance sheets, and you decide if it's worth buying it. Don't listen to me. Always do your own research. You make the final decision. As of that, thank you very much for watching and have a great day.